Hey everybody, it's Pete. Welcome to Stocks for Breakfast. Today is Monday morning, April 13th, 2020. Today we're going to follow up on some things that we talked about in yesterday's best stock picks, but to give you an overall view of everything, we're going to discuss some of the stocks that picked up and found some momentum on Friday despite the market being closed early, excuse me. We're also going to talk about the market reversing. We actually had a pretty strong feeling into Friday afternoon, into the weekend, that we said that it looked like the market hit some significant resistance level, which it did, and now we're actually down pretty big in the futures overnight. There's various news about why, and again, as a trader, why is always found out after the fact, and we don't want to do that. We want to just read the tape and pay attention to the price. So we're going to add a little bit of something different today. We're going to talk about trading the news, whether it's an upgrade, an earnings report, what's going on globally right now, the big story from over the weekend, which is the OPEC, the oil deal. We're going to discuss that just for a little bit, but it's really more about should you trade the news or not. Earnings season, a lot of play goes on during earnings season. Some people specialize in trading nothing but earnings. Personally, I got a nice question asked today about how I hold positions into earnings versus day trading the earnings when they unfold. I will tell you this: if you've never been a full-time day trader and haven't sat at your screen during an earnings announcement, it's very similar to trading an FOMC announcement, interest rate decision. If you've never done that, or if you have, you understand what I mean. Essentially, stocks go like this, they go like this, they go like this, they go like this, and then they finally pick a direction. And that's because in today's world, the speed of the news gets disseminated so quickly. Everybody has an opinion, and numbers are going all over the place. Orders are getting placed all over the place as the news is getting completed, right? It's very, very difficult. It's a whole skill in itself. Just like back in the day, NASDAQ level 2 scalping was a whole way of trading, just using a level 2 quote. Trading the news, trading pre-market, trading after hours, completely different, excuse me, from trading during the market from 9:30 to 4 during regular trading hours, and even another style is swing trading. I want to make it clear, not one style is the correct style. That's first off, I want to say. I'm going to give you how I trade based on my 20 years of experience, and I like to trade where I have control. I like to trade where if I put a trade on, I have a really, really good idea of what's going to happen next. Now, does that mean I always make money on every trade? Hell no, nobody does. Anybody who says that is full of beans. But the better job you do of identifying the one way that makes sense to you, which for me is order flow and momentum with really super disciplined money management and trade management, which, by the way, if you want to learn one skill and one skill only that will change everything, it's really assuming you have an edge. Assuming you have an edge, because I'm talking about a skill. An edge is the setup that you have going into your trades, right? It's the reason for getting into a trade in the first place. And I guess you could consider that a skill, but really the bottom line, if you want to develop a skill, it's really understanding how to make money. And I harp on it all the time. I bring it up all the time. Is the difference between reading charts and being a tape reader, reading charts and being a trader, is the size of the Grand Canyon. Understanding how to read chart patterns is not trading. It's not trading. I'm sorry, it's not trading. That's like taking your road test to get your license, and it's the written portion of it. It has nothing to do with actually getting out there and actually being in the market, being on the road. So if I specialize in anything, and hopefully you'll keep watching the videos so we can help each other and build a nice little community together, it's what happens after we get in the trade and how to manage those trades. And I'm sure you've experienced this, where you've had trades where you had a nice profit in the position and it came all the way back and you gave back those paper profits. And then you had other positions where your last trade affected the next one. So now you're like, well, I got out of the last one too late. So now I'm going to book a profit on this one. And all of a sudden it keeps going after you got out of it. So you turn, the first one you turned $500 into a flat, which a flat means you basically got in and out at the same price because the trade was managed incorrectly. The second one, you turned $2,000 into $500 because you got out too soon. And that's the difference between a chart reader and somebody who's a trader. A trader understands there's certain situations when booking that $500 is the right trade. And the easiest way for me to explain it is you get a move in your direction and a pause, or you get a move in your direction and a pause that keeps going. So how do you know the difference between the first one and the second one, where you book profits sooner because it's the right trade? And how do you know when you should be adding to a position because that's the right trade? And the thought process on top of that, excuse me, my coffee is coming up on me today. How do you know what's the right thought process for one versus the other? Well, you need to know your strategy. First of all, you need to know, am I somebody who's looking to take smaller profits more frequently, or am I looking to what somebody might call as a position trade, which might be I'm going to buy in the morning and sell at 4 o'clock in the afternoon. Now, again, if you're a swing trader, it could be you're buying on April 1st and getting out on April 29th. It's the same thing. It's the same type of idea. We're going to take a look at the weekly charts and exactly how you can set that up. I actually got a question today. My screen gets shown once in a while, and up in the top right-hand corner, where I have the list of stocks. Those are my general list of stocks that I take a look at. But then I'm also going to show you how I scan for stocks during the day. And there's only two numbers, period, that I look for. And it's kind of shocking because most people don't really believe that it's that simple. But trust me, once you do top-down analysis and you get into the market and you say, okay, today, this week, this month, I want to be a buyer. Or today, this week, this month, I want to be a seller, because the order flow, the predominant selling consensus in the market right now is either buying or selling, and it's obvious. Then you need to drill down and say, I'm going to trade either this basket of stocks, and they could be all correlated, or they could have nothing to do with each other, that just represent a whole bunch of different stocks that are liquid, that follow the market, which is generally the way I'll trade. Or you can just look for scans all day and whatever pops up in the scan, which I find that very difficult to do because you don't really know the stocks. So there's a couple of different scenarios. So I'm going to get into the market first, some news very quickly, because I don't like to harp on the news. I don't know anybody's experience, but what I do know is the charts. And I do understand how to do tape reading on the charts. And I could definitely walk everybody through what I'm watching to set up high probability trades, which, by the way, also, I'm getting some really good emails and really good comments as feedback of stuff that you would like to see in the future videos. Absolutely keep them coming, because the whole point of me doing this is I want to help. I want to help. And again, if you haven't seen it in the past, I get people ask me why. If you're such a good trader, why do you want to help? Well, trading's damn hard. And I've been through it. If you're struggling, you can't get past break even, you're on this roller coaster of where you finally stop losing money, but now you can't get positive. I've been there. It is hard. Trading is hard without structure. And if I can help you with that structure, I'm kind of like paying it back, because there's so many sleepless nights. I used to call them flashlight seminars, where you'd be up at midnight, 2 o'clock in the morning, reading trading books and your notes at 2, those are the seminars when you go the extra mile and you're studying while you could barely stay awake. Those are the nights where you know how bad you want it. I'm a big student of Napoleon Hill. If you have a burning desire and a definiteness of purpose, you can accomplish anything, but you have to keep going. But hard work is not the only thing you need. You need hard work, and you need to pay attention. So there's research, ideas, test, feedback. Research, ideas, test, feedback. There's this loop of learning that if you only have ideas and test but don't pay attention and don't do better, you'll never improve. So that's our job together, hopefully, if you continue to watch the videos, and please subscribe, because I think you'll really find these helpful, because these are all based on my experience of stuff that I've actually done in the markets. So now we're going to go into the charts. We're going to take a quick look at the news. We're going to get into the weekly charts, and then we're going to take a look at the scans. If you happen to be tuning out of the video and you don't watch the whole thing, maybe you have to run or whatnot. The financial stocks lit up on last week, and specifically into Friday. And it's not so much the fact that they had energy candlesticks. It was more the fact that they had larger volume and energy candlesticks. So we're going to keep an eye on them this week. So we're going to head over to the charts. We're going to take a quick look at the news, and then we're going to get into the scan. So you can see, if you watched yesterday's stocks in play video, best stock picks video, we actually mentioned that the SPY hit resistance. And by the way, the market was also up 12. The Dow was up 12.7% last week. That's a really big move. And most of the indices also hit that 50% retracement level that we discussed. So not shocking that we're down. A lot of it's going to be contributed to the OPEC story over the weekend. Whether it's good or bad, again, that's everybody interpreting the news. Let's not interpret the news. Let's let the charts tell us what we want to do. If you feel like you have enough skill to interpret the news, knock yourself out. I'm not telling you to do it. I am telling everybody else it's very difficult. So let's let our tape reading skills tell us what to do next. So the big story of the day, the big news of the day, the oil production cut, and really depending on where you read. And this is kind of my point about the news. Dow futures slide 300 points, historic oil cut. Then you have Goldman Sachs saying the bottom is in. Short term, long term, I don't know. You can read the article a little bit more. It's on Bloomberg. And then you have oil climbs after OPEC agreement and oil. There's stuff going to be on both sides of the tape. So you decide whether or not you want to trade the news. I personally think it's easier, and I feel like I have more control when I'm letting the news unfold, and then I am making my own trades. So what we're going to do now is we're going to first take a look at the weekly charts. And we actually said that, and the reason I'm looking at the weekly charts is because a lot of people watching the videos are not day traders. So I want to make it clear, the information and ideas that I'm discussing all the time, I'm talking about all of them on daily charts. And I predominantly trade as a day trader if I'm looking for day trading opportunities. I'll predominantly trade day trades only in the direction of the higher time frame ideas, because that's where all the order flow is. That's where the bigger money is. Why would I want to fight the bigger money? And I've had so many conversations with people about this recently where, and I just want to come back to this because it's super important. If you have an idea on the daily chart where you think a stock is going to go, let's just say for argument's sake, today's Monday, and you think there's buying coming into the market today, and you think that you keep seeing well-bid candlesticks over the week, and Tuesday is higher highs and higher lows, and Wednesday is higher high and higher lows on the daily candlestick. But let's say Tuesday afternoon, despite the fact that it's higher highs and higher lows and everything's positive, Tuesday afternoon at 1 o'clock in the afternoon, for argument's sake, the stock that you're watching starts to go down. And you're like, oh my gosh, I see a resistance level and it's going down right now. I'm going to short this thing right now because there's an opportunity right now. I'm telling you right now, that's going to work once or twice, and you're going to get steamrolled because the buying that you decided you loved for the bigger picture is going to come back in, and they're going to come back from lunch and they're going to run you over like an ant. How do I know this? Because that's what I did earlier in my career, and it doesn't work. It does not work. It works once in a while. You're going to feel great on the couple of times that it does work because you caught that little blip as opposed to catching this wave that's going back in the other direction. So I want to make it clear, whether we're talking about day trading, swing trading, holding something for an hour, holding something for 3 weeks, it is infinitely easier to be profitable consistently by identifying the big picture money and then looking for opportunities only in that direction. Now, I know I'm going to get comments and I'm going to get emails, but what about day traders that trade really super short time frames and their trend is the 15-minute chart? There's nothing wrong with that if you want to place 35 or 40 trades a day, because that trend can change all day, every day. Nothing wrong with that. What I want to be clear about is that it's easier to trade in the direction of the obvious order flow. I'm not saying don't do it. I'm not saying it's not possible. I'm saying it's easier to pick a direction and then pick a spot. So we're going to get into, again, I wanted to come back to that because it's super important. So anyway, here's the weekly chart of the SPY. We recognize the fact that this 280 level, after this monster move, which as I said before, the Dow is 12.7%. If I'm not mistaken, the SPY was 12%, I believe, for the week. Yeah, you can see it up on top there, 12%, 12.09% for the week. We hit a 50% retracement level, and now we're actually trading lower. So here's the thing. We're trading lower pre-market, but that doesn't mean we're ready to roll over. So this is kind of making my point. We need to see the week start lower. So in other words, the opening print, and then we start to trade below that opening print and hold below that, as well as holding a lower offer, meaning a lower high. And that will now mean that we're well offered on the weekly chart. But that doesn't mean we're completely well offered. That just means we have lower highs, because down here would be technically a well-offered week, and that's a lot of selling. If we retrace $30 in the SPY, that's a lot of selling. So the odds of us having an inside candlestick this week are pretty good. The opposite of the inside candlestick is if we open lower, start trading above the Monday open on all of the stocks we're looking at. We just happen to be looking at the SPY right now, and then take out the highs again. That would be continuation of this momentum. I don't anticipate that happening today. I think we're going to have a bearish to a bearish to inside candlestick. I don't think we're going to take out all the way down on the lows unless the numbers for what's going on in the world right now increase dramatically and the economic outlook doesn't look good. But again, those are the scenarios. Remember what I said before about when you should be booking profits versus when you should be holding for a little bit longer plays? If we end up having an inside week this week, there's going to be tighter consolidations, and that will dictate your trade management, which means you should be booking profits sooner on anything that's a short sale, unless it was already in a bearish environment. So, for example, some stocks, I'll just pull these guys up as an example, where the stocks are like this, where you already have weaker, well-offered stocks on the weekly candlesticks, and then those opportunities are better. So remember, it's not smart to short sell strong stocks. Well, it's a lot, seashells by the seashore. It's better to short sell weak stocks. Okay, so weak stocks look for short sales, strong stocks look for buy. So I just gave you the outlook for the week before the week is even unfolding. If we make higher highs, higher lows, despite today's opening, and we're trading above Monday's price in all the stocks, then you can continue to look for longs and feel confident and add to positions on a pause. If we open lower, remain below the weekly open and trade lower, you could take short sells in stocks that are well offered as far as just lower highs and do it less aggression, meaning book profits on the short side unless those stocks have room to go. So what we're gonna do is actually got some interesting ideas from people. Let's go look through all of the charts. So you can pause this. I'm just gonna give you the list. I'm actually gonna sort it by alphabetical order. It might be easier for you. You can pause the video so you can see which stocks I have in here. And you can get a feel for, I have stocks all over the economy. And I kind of feel like if they move with the market and I get a good read on the market, these stocks will be easier to trade. So you get a feel for, okay, which stocks were positive on Friday when the market was positive. So those were the first stocks I was looking at. And I'm actually going to take this in a little bit more detail in a second. So if we just stick with the weekly candlesticks, you can see Tesla actually inside candlestick breakout. We need to stay above Friday's high, which closed on the highs, which a lot of stocks didn't. So we're looking for follow through there out of an inside week. And again, that's what we're looking for. If we get it, awesome. If we don't, we just gave you the trade management, right? If you want to be long a stock and it starts trading lower, that's not the right stock to be trading. You want to be short a stock that's already weak. So this is actually one of the ones, the financials that we discussed over the weekend. So obviously, JP Morgan on the weekly, beautiful inside candlestick breakout here, taking out the prior 3 weeks, almost the prior 4 weeks with a close. This is one I'm going to be paying attention to this week. And again, Goldman Sachs, similar. See how you're starting to see all the money in a certain sector on the same side? The opposite side of that, though, is the tech sector, which, although it broke out, we closed well off the highs. And a lot of these stocks actually had pretty significant bearish engulfing candles on the daily candlestick, which means it took over the entire previous candle. Now, what I don't like here, despite this longer-term uptrend, I don't like these topping tails. Generally speaking, get up there and fail, get up there and fail, get up there and fail. That's usually a sign of a reversal. But although we didn't get a repeat of this where we didn't close below the open for the week, we did fail at this level again and close near the lower part of the week, the lower part of the candlestick and the lower part of the week. So what we're looking for this week is we have some inside candlestick breakouts. That's essentially the play for the week. So now it's Monday morning, 3 hours before the market opens. We're already giving you the plan for the week. Which stocks in your list are strong? Which stocks in your list are weak? Which ones should you be looking at based on how the market's trading for the greatest likelihood of follow through? So if the market's strong, you have your list. If the market's weak, you have your list. If it's a long play and strong, you need to look above and say how much room is there to go. So for example, if we go back out to the daily charts and we'll take a look at Netflix, we know that this level has been the level for a while. If you want to be long Netflix today based on this recent momentum, which again, that's just a couple of weeks of momentum, right? You know 385 is a monster resistance level and it doesn't have a lot of room to go through there. Now, maybe you have $10 or $15 to that level. That doesn't stink. But my point is you need to recognize what is the level, where is the place that you're expecting it to pause. So anyway, I want to get now into recognizing the scans during the day. So I just want to give you some quick criteria without really getting into this in too much detail. Basically what I'm looking for is we first look for strong stocks, weak stocks, which by the way, we cover all of this in our coaching group during the day, our private community. I'm getting a lot of emails from people during the day asking about coaching. I'll post a link. I'll post my email below the box, and I'll reply by email because I don't want to turn that into something other than replying to feedback. So if you're interested in coaching, we discussed all this all day in a live market together. So essentially, these two columns are the most important to me. Now, that's assuming going into the day. I know I want to be long or short. So in other words, the order flow is bullish or bearish. So let's just say, for argument's sake, bearish. And I know this list of stocks, for argument's sake, are stocks that I want to sell coming into the day. So going back to what we started out in the video, the first things I want to cover during the day is which stocks I want to be long, which stocks I want to be short. So let's just say, for argument's sake, this list is that list. So now I'm looking, I want to see, do I have confirmation of the longer term order flow intraday? So again, you could do the same thing for the week. You could do the same thing for the month. I'm just using day trading example to accelerate the example size, okay? So what I'm looking for is it negative from the previous close? And is it negative from today's opening price? So this could be Monday's opening price for the week, and you could do these on your individual charts, or this could be today's opening price on Monday looking to day trade the stock. The principle is the same. So I'm looking for today's order flow from the previous close to be the same, meaning in this case, both negative, to look for the best short sale opportunities now. We could do the same thing on the opposite side, where if I change this filter to above, that will change the setup now. And you can see now I'd only be looking for stocks on the long side. So essentially what we're looking for there is we're looking for short-term confirmation, which is kind of proof from price, right? Price is telling us what it is right now, and that's tape reading in sync with our longer-term order flow. So you can see how I kind of build my argument from swing trades to day trades to position trades. I'm looking for higher time frames to give me the direction. Then I'm looking for short-term confirmation of those ideas. If I find an entry that suits me, then I go back to the higher time frame to manage the trade based on profit potential and how long I plan to hold the trade. So I know I hit you with a lot there, but if you really pause it and watch it, there's some powerful stuff in there because it makes trading easier, and it really takes you from just reading the charts to really understanding what it means to be a trader. And that's really what I specialize in, which is turning struggling traders on that roller coaster, chart readers on the roller coaster, into traders, into tape readers. And that's what we do, putting all these pieces together. So again, if you're interested in learning more about the coaching program, I don't want to sell it, but I'm getting a lot of emails about it. I'll post my email below, and you can shoot me an email, and I'll give you some information about that. If you have any questions or feedback about the video, absolutely love to hear your feedback. Post a comment. I'll get back to you as soon as I can. And if you like the videos, absolutely please subscribe. It would mean the world to me. And you'll get updates too as well. So we have the game plan for the week. It's Monday, 3 hours before the market opens. Doesn't matter if you're swing trading or day trading, that's the plan for the week. We have the weekly candlesticks, what we need to see, whether or not we break last week's highs on a lot of individual stocks. Do we trade an inside candlestick this week? And what does that mean for how long you hold your profits? That's the big thought process for the week. Have a great day, everybody. Be safe, be smart. I'll see you later. Thank you.